All right, folks, welcome back. This is episode 29. I'm going to be doing a brief review of what took place today. I kind of want to bring your attention back to that 12,553 and a quarter level, which is the relative equal highs here on NASDAQ. So that was kind of like the basis for why I went into the market today, Monday, the 16th of May, 2022, with a bullish bias. I was looking for this draw on liquidity for NASDAQ. I originally went in looking for a trade in NASDAQ, but all right, and the S&P, much like the NASDAQ, had a daily swing low. And while we didn't have relative equal highs here for S&P, the bias was, in my opinion, warranted for at least the beginning of the week, looking for a continuation on the upside. All right, so we have the 1 minute chart. I went right into the 1 minute chart because we're starting with the bullish bias. And at 9:30, we see the market does, in fact, take out a short-term high. It declines. I'm not interested in going short. It does not give me a pattern anyway. Notice that there's no fair value gap revisited. The market creates this relative equal low, starts a rally, trades up into the afternoon in here. I want to see it create a buying opportunity. Now, the logic behind all this is we're in a day before Fed chair speaks, so there's going to be very low volatility as a result of that. So it's going to be a small range day. Doesn't mean you can't trade it, obviously, but it takes a little bit more experience. Now, I'm not saying that you should trade ahead of Fed Chair Powell speaking or any future Fed chairman, because it's going to be a very quiet day, usually like this, okay? And it's important to know when the volatility is likely to occur and when also the volatility is likely to shrink up and get kind of like lethargic. If you look at the S&P at the top, you can see the drop down, relative equal lows, and then we had the similar pattern here, but look what NASDAQ was doing. See that? Lower low, when S&P was saying, I don't want to go that low. So it was resisting going lower. Then we retraced higher, just like this NASDAQ did, but then NASDAQ made a lower low than that of 10 o'clock in the morning, while at the same time, the S&P said, no, once again, I'm not going lower than the low I made at 10 o'clock. So we had a divergence here and here. The importance of that is I already had a bias that's bullish. There was no short trades that were lined up with this model today. So we're in the 1 minute chart here. And I want you to take a look at what we have framework-wise. Looking at price action like this, yes, you can see there is a rally up. It breaks the short-term low, a fair value gap. It trades up into it and breaks down. Big deal. This doesn't fit the criteria because the displacement leg here would require us to see a fair value gap above 50% of the high and the low, the displacement leg, and we don't have that. We'll look at the relationship between the NASDAQ, which was a little bit sloppier in here, versus the S&P, a little bit more structured here. So the fair value gap in here, this candle in here, it wicks down into it. And I want to get close to this fair value gap without it running too far away. So I kind of want to touch a little bit tonight with close proximity entries. That means you might not get so precise with your entries. You might fumble with your order entry. What do you do in this situation if you miss the ideal entry? Well, as long as you're getting in there really close, or like I'm suggesting here, a close proximity entry, I don't think there's anything wrong with it. So if we are looking for entry patterns, the idea is we want to get into where our model is suggesting it. So we're seeing the market trade lower, lower, lower. It's failing to make a lower low like NASDAQ. And we have this low that's probably not going to be taken out because we're bullish. The market rallies up. We have a short-term shift in market structure. Then it trades back down into the fair value gap. Look how many opportunities it gave to go long. 8 candles. It gave an opportunity to get in this area here, either inside the fair value gap or in close proximity to it. Now, when the market starts to rally, I have one more indication that the market structure has shifted again, bullish, with these highs taken out here. All right, we're over here on trading view. The market trades lower, creates that short-term run here, rallies, breaking market structure to the upside, trades into the fair value gap and the secondary fair value gap, and it runs up into the liquidity above here.